Hello and welcome to another update video about Ethereum. So Ethereum has, in the last video, basically done what we expected of it. It reached again this yellow resistance area. It actually made a slightly higher high. I think we didn't quite reach the 38.2% fib level in here, but it basically moved up further into the yellow resistance area. That was part of the expectation as explained, and as Bitcoin still didn't reach its yellow resistance area. So I would actually expect it ideally to go a bit higher, but that last red candle here makes me think we might go down short term a little bit. Well, we might go down already in this wave 5, yeah. So this is still the wave count, haven't changed it. The short term wave count as suggested here yesterday was that off this high here from this week, that we moved down in wave 1, moved up in a 2, came down in a 3. This could be a 4 here, and a wave 5 down still to follow. So we're looking for one more leg down here in this particular wave pattern and structure. The reason is that this move up is looking very corrective, only in 3 waves, and also just look at the angle, the steepness of this move. It's not very strong compared to what has come down. Some people might even call it a bear flag. On the Bitcoin chart, we've got a nice ascending wedge. Yeah, and here we had a trend line that is broken now. Also, this I think would resemble an ascending wedge if I drew another trend line on top of it. And yeah, I mean, this would most likely take us down here in a wave 5. I mean, can we have a target? The problem is if I formulate the target, the wave 1 here was unnaturally long. So I'm not really sure how much that would benefit us, because it seems unrealistic, such a long wave 5. But we can try another way of calculating target. That would be by taking the length of the A wave, going to the high of the B wave. Okay, that also doesn't really help us, because the ideal target here would have been the 1.618 extension at 1203. So yeah, all we can do then is to use the Fibonacci retracement areas in this red support area, in this red support box. This is the support area that we should not break below. If we do it, then it's most likely going to send us down straight away to $1,000 and even maybe below. Someone, by the way, asked me why, if I draw the Fibonacci retracements, why do I not go to the top? Well, you can do, but if you're using the Elliott Waves, this would not be the right approach, because I'm looking here at the retracement areas of the wave A. The wave A ended up here at 1300. So I have to look at what is the retracement of the wave A, and it gives me this support area. It's located between 1130 and 1190, pretty much, between the 50% fib level and the 78.6% fib level. What makes it difficult for anybody who doesn't use the Elliott Waves is this high, which according to Elliott Wave method or theory is only a 3-wave structure to the upside. I would consider it a B wave, and you don't draw the fibs to the B wave high, you draw the fibs to the A wave high, at least in this instance. But it's very complex, you know, it's a rather advanced concept, so it takes a while to learn all this stuff. But you know, this is still where we are in this support area. We did get into it. It's a target area. Ideally, somewhere in here we reverse to the upside and realize still that short-term potential, that short-term upside, and that's still possible as long as we're holding the support area. I know a lot of people always get bearish when we see red candles, and when we get towards the end of such a downtrend, that's when a lot of people open shorts. Even though it can easily go the other way from here again, even if it's just short term. But no, you know, this is sort of one area of support, basically the last area of support where Ethereum can hold, realize some more short-term upside potential into the 1400 region before it comes down as well. But if we go down straight away, then it can already now send us down below $1,000. The thing is, we've got 2 scenarios on the chart here. We've got the green count and the red count. They're both supposed to turn around in this red support area and move up and make a higher high, ideally in the 1400 region. Of course, there's a bearish count, a directly bearish count. Don't get me wrong, this is also not a very bullish visualization. These scenarios that I've got on the chart, they would also just be part, at least the green count, the red count is a bit different, but I would have to change the higher level assumption. But both of these are supposed to make a lower low afterwards. Now this is, in my opinion, all part of a corrective wave pattern A, B, C. If we're in the green count, where we should see some short-term upside, we can also make another low afterwards, but possibly stay above $1,000. If we are in the red count and we only make 3 waves up here, then we are going to break most likely the $1,000 level afterwards, where we don't know that until we see where we are going to peak here and how the beginning of the downtrend is starting. But either way, I would expect a strong decline after we push a bit higher. Should we only, we get into this red zone, let's assume that, I mean, we're already in there. So let's say we reverse out of it, which I would expect. I don't expect us to go through straight away. I would expect us to see at least a reaction to the upside. So either in the green or the red count, which are basically to be seen as one, because short term they are very similar. But if we don't see 5 waves up, so the C wave would contain 5 waves, and the green count as well. So 1, 2, 3, 4, 5. That's what you ideally want to see. If we get stuck here below this resistance area at around 1270 and we see only 3 waves, so if we see something messy or something that really clearly only gives us 3 waves, well, then I have to assume that we're going to go down sooner than anticipated, and that we will go down in 5 waves and most likely make new lower lows. And we will be able to hopefully see that based on the structure that is starting to move to the upside from here. And I'll keep you updated. If we see something clearly impulsive, I can probably rule out another low. I know you can never really rule things out completely, but it will become less likely. So I'll keep you aware, I might make you aware as soon as I see things. As you know, I'll keep you updated. But they are basically the scenarios we've got here. So short term, one more lower low in the red zone expected. Let's see if we do it. If we push above the yellow zone straight away, it would be a rather bullish signal, because then we haven't got 5 waves down. So I'll keep you updated about the development here on the Ethereum chart. Good. So either way, in summary, short-term upside in each scenario, and then it depends on how high do we go, and then we can make a call when we have a bit more price information here. Is it likely we're gonna break it straight away without making a higher high, or are we gonna make a new high before we come down? Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Also make sure you follow us on Instagram and Twitter. And if you're interested, maybe check out the trading course on morecryptoonline.com. Thanks a lot for watching. Bye bye.